Hello, trading is closed on the 2nd of August, 2024. As always, we'll do our disclaimer first, go over our calls, and make our predictions. It's my trading plan for Monday, which is August 5th, 2024. Please remember, my calls can be wrong. All trades should be made at your own risk. Also, for the next 2.5 weeks, I probably won't be able to watch the market much intraday. I'm going to try to make a video at the end of the day, but I'm not certain I'll be able to do it every day. And after 2.5 weeks, I plan to return to my normal schedule. The market always knows when I'm busy because that's when it makes its biggest moves. Well, today's pattern was a pattern with the early low, so we got that. And Monday should have the early high. Here's what we said. We said either we gap under support or support wins. We dropped right to support. We said if we gapped up smartly, the elements were there for a strong rally, but if we gapped down smartly and we hold it, which we did, then support fails. And support failed in grand style. These are the patterns we should see next week. This drop isn't over, but that doesn't tell us about Monday, which we'll get to. We get to cross a target off the list, 53.54.30. The market made us wait almost 2 months, but when it printed, it was support here and resistance here. The next number on the MEJT unfilled targets list is 52.66.57. That's the next place where I see support from a number of reasons. It's for one thing, it's a Fibonacci target of the prior consolidation, and we'll look at some other things too. Now we gapped down, hit a low, lower low, close over all these lows. If that's maintained, it's a bullish pattern. Doesn't mean we have to close higher, but it should lead to higher prices. That'll all be killed if we gap down and promptly undercut this low. And in a market like this, that's entirely possible. For one thing, we had a wall into the close. That's usually not smart money. Often we gap down. And futures dropped right after the close. Normally, I wouldn't trust to drop after the close on a Friday. I would say we had all day to do it, and we didn't. But we're in such a big free fall here, that might be the real thing. MEJT did say this drop wouldn't stick, and it didn't. We've already retraced. These are the next numbers on the unfilled target list. 52.66.57, 51.89.72, 51.58.58. Now, as far as the ultimate target goes, that's way back in May. But as I said at the time, I get about 150 ultimate targets a year, and one fails to print about roughly once every 3 years. So having topped out in the 56.69 area, I think it's highly likely we're going to see at least 51.89.72 undercut, and most likely the 51.58.58 too. That doesn't mean we have to stop there, though. Well, this is Tom DeMark's TDST line. He has support going for 1 bar under the line. Now, any break needs confirmation. We have to trade under today's close by 1 cent, or this break doesn't count. But for right now, that's the first 1 full bar under his line. And assuming we trade under today's close by 1 cent, that's as far as his support level goes. I consider this a break pretty much right now because we have a number of partial bars under this line, and this high was under this low. So I think that's enough for me, but ideally we should trade under this by 1 cent, and ideally we should even trade under this low, but I think that's enough. This is an old TDST line, and the next one under that is 5,064.70. That's close to this 200-day moving average, 5,765, which is moving up. Now, when you have a sharp drop into a 200-day moving average that's moving up, almost always that's going to hold. Even if it doesn't hold forever, it'll hit on the first challenge. So if we do go into free fall here, it wouldn't be surprising if we trade a bit higher than the 5,007 we are now. And if we did fall, there'd be support not just from this, but from this line. Now, frankly, that's over 300 handles lower. Doesn't mean we have to go there, but if we go into free fall, I think it'd be highly unlikely we go lower than that. Right now, we are at a 50% retrace. That may give some support, but I'm not counting on it, but at least it's there. We should be aware of it. Well, I don't like to catch the falling knife, particularly when I won't be around to watch the market, but there's a good chance that this 52, 66, 57 level is going to hold if we see it in a straight line drop. We did drop under this trend line I've been watching, and I'm going to give up on this blue one. Nothing works every time. That one's not going to work. I think eventually we're going to drop at least the Fibonacci retrace of this whole move. 5,071.50 is a Fibonacci retrace, 38.2%, and that's pretty close to the 5,064 TDST line that we mentioned earlier, and also to the 200-day moving average. So trading a little bit under 5,100 before this is done, at a minimum, is certainly plausible. Let's take a look at the wave count. When it's this early in the drop, you can't really be certain of the count, at least I can't. But we had this wave A measured from the top. That's right here, if you look through it. Right here was A. We had this as B. We have to find a way to count C. Now, if C is at the 52, 66, 57 MEJT target, we have some beautiful Fibonacci relationships. We have in gold, ABC will be a direct hit. We have in black, ABC will be a direct hit. We have in blue, in wave C, ABC at that level as a direct hit. And finally in green, ABC. All of these balance out right at the MEJT target from June at 5266.57. So it isn't a guarantee it's going to print, but if it does print and we get there in a straight line down, that's a good place to look for support. And if you like to catch a falling knife, you can try around this level. And if it's wrong, at least you don't have to sit forever. If it's dropped, if we fall too much under this, then that's not the right count probably. But it would make a pretty picture if it printed, particularly when Norm Winsky, in a video that I posted earlier today, has a significant change in trend based on his astrology. After today's close, he enters his trades right at the next day's open. So if, and that's an if, we see 52, 66, 57 at or closely after the open, shortly after the open, it would have a lot going for it. At least you'd be close to a stop. Well, Monday's pattern has a early high regardless of where we open. Long term, I think eventually we'll trade past this year's high. We've clearly completed a major bottoming pattern over the last few years. Neither the sentiment indicators nor the wave count that I have the elements I look for at a permanent top. Intermediate term, we have lower to go. I think we trade under 5,200 cash with a decent chance to challenge 5,000 before this drops over. And those are targets. Those aren't stop and reverses, although they could turn into them. Short term, I think it's a harder call. It's always tough to catch a falling knife, and it's hard for me to pick an entry when we're just collapsing like this, either long or short. But we gap down, hit a lower low, and close over all intraday lows. And if that's maintained at the open, it's a bullish pattern. Should lead to higher prices regardless of where we close. If we gap down and undercut the low of day, that kills the pattern. And the wall into the close and the plunge in futures after the close both make that entirely plausible. I can't see any situation in which this collapses over regardless of what happens Monday. Norm Linsky has a change in trend after today's close, so if we gap down, there is a MEJT support area and wave balance right at 52, 66, 57. If we bounce from that level, it would make a pretty picture. It's a reasonable place to look for a short-term low. For the next two plus weeks, I won't be able to watch the market much intraday. I might not post after every close, although I'll try. After that, I plan to be back on my usual schedule. So it's the pattern with the early high, much lower to go. Hard to pick entries here, long or short. But if you want to catch a falling knife, we have a plausible place. And if we do rally first, it's a matter of time until this low falls. And that's today's call.